Ladies and gentlemen, good day and welcome to State Bank of India Q4FY22 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Pawan Kumar Kedia, General Manager, PPR from State Bank of India. Thank you, and over to you, Mr. Kedia.
Thank you. Good evening, ladies and gentlemen. I am Pawan Kumar Kedia, General Manager, Performance Planning and Review. On behalf of the top management of SBI, I extend a warm welcome to all joining us today on SBI Q4 FY22 earnings conference call. On the call today, we have with us our Chairman, Mr. Dinesh Kumar Khara, Mr. C.S. Setty, Managing Director, Retail and Digital Banking, Mr. Ashwini Bhatia, Managing Director, Corporate Banking and Global Markets, Mr. Swaminathan J, Managing Director, Risk, Compliance and Stress Assets Resolution Group, Mr. Ashwini Kumar Tiwari, Managing Director, International Banking, Technology and Subsidiaries, Mr. Alok Kumar Chaudhary, Deputy Managing Director, Finance, Mr. Shivam Dikshit, Chief General Manager, Financial Control, and Mr. Charanjit Adra, Chief Financial Officer. Before I request our Chairman Sir to give a brief summary of the bank's Q4 FY22 performance and the strategic initiative undertaken, I would like to read out the safe harbor statement. Certain statements in these slides are forward-looking statements. These statements are based on management's correct expectation and are subject to uncertainty and change in circumstances. Actual outcome may differ materially from those included in these statements due to a variety of factors. Thank you. Now I would request our Chairman Sir to make his opening remarks. Over to you, sir.
Thank you. Good evening, friends. Thank you for joining this conference call before a long weekend. It's a pleasure to connect with you all again in better circumstances, with the threat of the pandemic having been effectively addressed through a vaccination drive of epic proportions. I thank all our stakeholders, including our customers, shareholders, analysts, employees, and the broader ecosystem for being supportive of our efforts and initiative in our journey. I also take this opportunity to express my heartfelt gratitude to our shareholders and our financial market participants who have supported the bank through the challenging times in the recent past. The recovery of the global economy was hampered in Q4 of 21 due to the resurgence of Omicron variant, which led many countries to reimpose lockdowns, travel restrictions, and other containment measures, which actually disrupted economic activities and supply chains. More recently, the situation in Ukraine has further weighed down on the global trade dynamics and has led to spiraling of oil and other commodity prices. The domestic economic scenario has also been affected by geopolitical events. RBI has lowered the financial year 23 GDP growth forecast to 7.2% from the earlier guidance of 7.8%. While possible upside could emanate from the sustained domestic demand, government's thrust on capex, a normal monsoon, and healthier corporate balance sheets, the heightened geopolitical tensions do pose downside risk to the GDP growth. Amidst these extraordinary global and financial challenges that the world has faced in financial year 22, the bank has again delivered good outcomes in various profitability and asset quality parameters. This is a vindication of the flexibility and strength of our operating model and the stupendous efforts put in by the team in the State Bank of India. This has helped us to close financial year 22 with robust results, which affirm our commitment to maintain our leadership position and set the tone, maintaining the momentum in financial year 23. I would like to highlight a few key areas of our performance. The bank has clocked highest ever profit of 31,676 crores for the financial year 22, which is an increase of 55.2% over financial year 21. The return on asset at 0.67% has witnessed an increase of 19 basis points, while ROE at 13.92% has increased by 398 basis points over the previous year. The bank's deposit and advances grew by 10.06% and 11% respectively in financial year 22, which in absolute term works out to 3.70 lakh crore and 2.79 lakh crore respectively. Our retail personal book at rupees 10 lakh crore is growing at 3-year CAGR of 16%, and we have also maintained our leadership position in home loan and auto loans. The bank's NII for financial year 22 has shown a YOY increase of 9.03%, while NIM for domestic operation stands at 3.36%, that is 10 basis points higher than March 21, reflecting the bank's resilience during a challenging year. As far as asset quality is concerned, the bank's gross NPA and net NPA as of March 22 were at 3.97% and 1.02% respectively, which is an improvement over financial year 21 numbers of 4.98% and 1.50%. The slippage ratio for financial year 22 is 0.99%, 19 basis points lower than March 21. The bank's ability to bring down the net NPA around 1% is a result of focus and continuous attention in this area. We have been able to contain the credit costs at 0.55% as against 1.12% as on March 21. An improvement of 57 basis points we have seen in this particular area. We have been constantly calibrating our lending strategies to maintain the quality of loan book, which is reflected in our corporate exposure, with 89% of the book being in investment grade. The book continues to remain well capitalized with CET1 ratio at 9.94% and capital adequacy ratio of 13.83% against the regulatory requirement of 8.6% and 12.10% respectively. The bank has also been able to keep the RWAs to total assets below 50%, indicating the quality of the portfolio. Our journey toward digital leadership continues. We have been witnessing increasing digital adoption by the bank's customer, and now more than 95% of the transactions are routed through alternate channels. The adoption of YONO has significantly increased, with registration costing 4.83 crores. YONO has created a significant value for the bank, and we are now moving towards YONO 2.0 with many more advanced features. Amongst bank's overseas offices, 9 foreign offices and subsidiaries have gone live with YONO Global. I am happy to announce equity dividend of 710%, that is rupees 7.10% per share. We are aware of the areas where we need to improve our performance further. With economic activity continuing to improve and the resultant higher credit offtake, the bank is aiming to increase its market share in advances. We are also focusing on current account deposits to improve our CASA ratio. Our long-term goals are very clear, and we are committed to maintain our numero uno position in the industry. Now, before I conclude, I thank you all for your continuous support to the bank. We are proud to be part of SBI and consider it as a privilege to be able to contribute towards the growth of our economy and the bank. We remain committed to reward your trust in us with superior sustainable returns over the long term. I wish everyone here good health and a very happy weekend. The floor is now open for your questions. Thank you very much.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The first question is from the line of Mahrukh Adajania from Edelweiss. Please go ahead.
Hello, sir. Hi. Sir, I had a couple of questions. Firstly, is that what would your, could you give us a breakdown of your loan book by benchmark rate?
Well, almost about 74% of the loan book is linked to MCLR, EBLR or T-bill rates.
Correct, but how much is EBLR, how much is T-bill?
See, when it comes to T-bill would be about 11%. and MCLR is about 41%, and external benchmark rate is about 23%.
Repo, mainly repo.
Repo is mainly repo link.
Got it, sir. So, and my next question is on small loans. So, a lot of PSU banks have seen big slippage in small loans below 5 crores. So, any geographic pressure that is visible to you there? Any experiences you can share?
No, actually, as such, I would say that our even smaller loan book also, it has actually improved in terms of its NPA percentage as compared to what we had seen in the past. So I think we have not seen any such trend. And even in the restructured book also, which we have, particularly as far as SME is concerned, the book was about out of about 32,000 out of 30,000, which is the current outstanding. MSME book is about 12,000 odd crore. But we have seen the NPA ratio of just about 720 crores, which is actually much better as compared to the general trend which you have seen.
So, if I can add, actually, Maruk, we have witnessed net decline of NPAs across the retail segments. Number one. Number two, even among the SMEs also, the run rate of slippages is lower than what we had pre-COVID. The third piece, what you asked, there is no geographical concentration of any of these loans. I think we are not witnessing any such concentration.
Got it, sir. Sir, in terms of restructured of 30,000 crores, so that is OTR 1 and 2. Over and above that, any past restructuring scheme, or this includes everything?
This actually includes everything. Only 2,000.
1 and 2.
Yeah, this is actually 1 and 2, and 1 and 2 is put together is about 30,960.
7,000 is earlier.
7,000 is the earlier book.
But there's no overlap in the two?
No.
Okay, so it's 30,000 plus 7,000, and would you be able to quantify your slippage from ECLGS and what the outstanding is currently?
Yeah.
ECLGS outstanding is about 32,000 crores now. The slippages are less than 2% so far.
Got it, sir. Sir, my last question is if you could highlight your outlook on CAPEX, corporate CAPEX for your bank, and I also see pickup in steel, textile and petrochemical loans on a sequential basis. That's working capital related or something else?
See, as far as what we have observed is that our working capital unutilized limits are about 276,000 crore. And when it comes to though the working capital utilization has improved, actually unutilized limits are just about 46% now. So I think as compared to almost 50% unutilized limits as at the end of the last quarter, the situation has improved. And when it comes to the term loan, the unavailed limits are just about 19%. So that also is actually showing that this is very healthy trend. Apart from that, we have some kind of a visibility of the proposals which are being processed by us. So I think that way that is a broad picture as far as the corporate book is concerned, and that is very clearly reflecting the kind of uptake which we can get to see going forward.
So just to add over there, the unutilized limits at the end of December were in excess of 310,000 crores. That has actually come down to 276, as the chairman said. The unavailed term loan also, which was in excess of 2.1 lakh crores, is now down to 2 lakh crores. So the growth in the corporate book that you've seen, a very big chunk of that has happened in the fourth quarter.
Okay, sir. Thanks a lot.
Thank you. The next question is from the line of Mona Khetan from Dolat Capital. Please go ahead.
Yeah. Hi, sir. Good evening. Firstly, I wanted to check the segment-wise breakup of slippages of the 2,800 crore of slippage.
Segment-wise breakup of?
Segment-wise, 2,845 is the quarter four slippage.
Right.
It was 1,200 in corporate, about 1,200 in agriculture. The remaining is retail and SME.
Okay. So, this includes one of the large retail accounts as well?
No, it is one of the large corporate accounts is included. One of the large corporate account is part of this, which actually we have provided for fully now.
Correct. We have provided for it fully last quarter. It's the same account.
Yeah, that's right.
Okay, sure. And secondly, when I look at the yield on advances, they have been, unlike most peers, they have been stable Q on Q in your case. So, any color on that?
See, the yield on advances as of now is stable, and going forward, I expect that it should improve. Because our 74% book is linked to external benchmarks, whether it is repo or it is EBLR or it is MCLR or it is T-bill. So, in case of rising interest rate scenario, it will lead to a situation where it should actually improve.
Sure. My question was pertaining to the fact that despite the sequential rise in your corporate book, your yield on advances have not been impacted. So, what really is helping?
Actually, part of it is also attributed to the kind of a interest rate scenario which was obtaining at the material point of time. And for a good part of the financial year 21-22, we had a scenario like that. So that is the reason why perhaps it has not moved as it should have on account of increase in our quarter, the corporate book.
Yeah, here of course I can add that, just take the example of the loan book that is linked to the T-bills, which is currently 11% of our total book. If you look at the movement of T-bill rates, just in the last week, the 91-day T-bill has moved about 100 basis points. So all the price action has happened in the first quarter of this year. So when we started the product, the T-bill rate was at close to 3.3. Today, the 91-day T-bill, the cutoff a couple of days back was at 0.95. So, if any improvement in yield happens, it will happen from now onwards, whenever the repricing happens.
Got it. And just finally, for the restructured book, for what percentage of the book has the moratorium ended and the billing started?
Among the home loans, the moratorium ended. In all cases, the repayment has started from April.
For the entire restructured book?
Yeah, for which actually somewhere around about 15,000 odd crore, which means about 50% of the book, the moratorium has already ended, and also repayment has started. And even in the home loan book in particular, we have seen a situation where the people have started repaying even as per the original repayment schedule. So, which means that they are not really availing the restructuring. Again, I would like to draw your attention to the fact that it is actually attributed to the stabilization of the cash flows. With the stabilization of the cash flows, we are observing that people have started repaying the loans, which even they are restructured.
Sure, thank you. That was very useful, and all the best.
Thank you. The next question is from the line of Gaurav Kochar from Mirae Asset. Please go ahead.
Yeah. Hi, good evening, sir. Thanks for the opportunity. So I wanted to ask on the investment depreciation, this quarter we've seen a 2,060 crores sort of cost. Is this the MTM hit since the yields went up, or is this something related to the security receipt related provision?
In fact, security receipts, part of it is on account of the security receipts, and we have only provided for outstanding in the security receipts.
Okay, so
part is, maximum component is coming from there.
Okay. Sir, anything else that could come up on the security receipt provision in fiscal year 23, or you think?
No,
It has been fully provided.
As of now, it is fully provided. If at all some new security receipts come, then only we'll have to look at it. Otherwise, as of now, it is fully provided.
Okay, got it. And sir, with the yields, the yield, benchmark yields have started to move up. Is that now, going to affect the bond portfolio in a way, or in this quarter maybe, if not the last quarter?
See, out of about 14 lakh crore of treasury, our AFS book is about 4 lakh crore? 5.6 lakh crore. And there our duration is 2.08. And that is, majority of that is HTM. So there actually HTM should, with the increasing yields, we should be benefited. And overall, let us see how really things really pan out. And because it is all valuation is done at a point of time. So how would be the yield on that material day? That we'll have to wait and watch.
Right. Sure, sir. Sure. And on the, just wanted your thoughts on this. In this quarter also, there was a negative net slippage for us. The BAU credit cost was 0. The entire credit cost could be attributable to the higher PCR that we opted for. Going forward in fiscal year 23, given we are in the middle of, say, a benign credit cost environment, how do you see the credit cost for this year, given that we are already sitting on high PCR, 90% to be precise, if I include the OCA accounts, and we also have some buffer provisioning of 30,000 crores. What are your thoughts on the credit cost for fiscal year 23?
See, we have set a boundary condition for ourselves as far as credit cost is concerned, which is 1%. And our effort and endeavor is to keep it as low as possible. So I think that's how I would like to respond to this question.
Okay. Sir, in a COVID year with 2 waves, we did around 90 basis points, including some, restructured related provisioning. Is it fair to assume we can do better than this in fiscal year 23?
See, actually, we all operate in a macro which is always uncertain. So it's very difficult. That's why we have set a boundary condition. But as I mentioned, that effort is always to minimize it. So, we cannot really visualize those uncertainties. So that is the reason why I'm unable to go beyond this.
Sure, sir. And just last question, if I can squeeze in. This we have observed, fee income has been weak for even the large private players. Anything that you can talk about, whether, because of the growth is it that growth is coming at the cost of some fee income, both on the retail and
actually, fee income, there are one very important lever which I would like to highlight your attention, draw your attention to is one is a forex income which you would have seen that it has gone up by almost 34%, and similarly the cross-selling income went up by about 32%. So I think we feel that there is a huge opportunity which exists, and we will be looking at really sweating this opportunity going forward.
Sure. And I was talking about the processing fee, sir. That has seen a decline.
Processing fee, of course, last year has been little tepid when it comes to new proposals, and hopefully, if at all this year, the kind of expectation which we have in terms of the corporate credit to grow, perhaps we hope to see better numbers here.
Okay. Perfect, sir. All the very best. Thank you.
Thank you.
Thank you. The next question is from the line of Kunal Shah from ICICI Securities. Please go ahead.
Yeah. First, respect to again Forex. I think you drew the attention to Forex. But what is actually leading to this kind of growth in the overall Forex, and how sustainable would this be? Because this quarter has been quite significant, 1,500 odd crores coming through that, yeah.
This is a sharper focus for the Forex traders which is emanating from our retail outlets.
Okay, so this would be more granular and there is no one-off, and broadly no we can...
I can assure you there is no one-off. It is broadly spread out. It's very broad-based.
Okay. So now this is more sustainable. And even on the OPEX side, when we look at it, particularly on, say, the card and the digital expenses, that has gone up sequentially as well as year on year. So what is actually leading to that? And is it like the upfronting of the cost, or again this trajectory will also continue?
Which one you said?
2,800 crores. This ATM cards and tech expenses, that's almost 2,800 odd crores, significantly up both on year-on-year as well as quarter-on-quarter basis.
I think predominantly is the tech expenses, right?
In fact, ATM, we are changing the lot of ATM.
No, that is not reflected here. Okay. Because we have a breakup, right, Alok?
Let me have the breakup looked into and just one second.
ATM exchange. 6 model modes.
So these are recurring expenditure only.
So actually recurring expenditure, which are all very operational in nature, and the major component is ATM interchange expense, which is there about 1,531 crores.
Okay, 1,500 is ATM interchange.
Yeah, that's right.
Okay. And on investment provisioning, last time there was 8,600 crores of SRs which were unprovided to the extent of 13%. So now that we have provided, I think 1,000 odd crores would be coming from SR markdown and 1,000 would be the M2M on AFS.
No, it is not M2M. We have actually we have debited the P&L and provided for it. It's not M2M.
Composition.
Composition.
Composition, yeah. SR is now, SR outstanding is about 7,980 crores and that is fully provided. So the investment depreciation largely is coming on account of the SR charges. The balance, of course, would be there.
Yeah, 2,400 from SR in the quarter, and around the remaining part comes from some of the provisions which were done on some of the bonds, restructured bonds.
And I think here also, that's all. Yeah.
No, sorry, couldn't hear that. Yeah.
So I said that 2,400 crores, between Q3 and Q4 together, we did accelerated provisioning. And the remaining is on part of some of the NPIs where we have made some provisions.
Sorry to interrupt you, sir. This is the operator. We are not able to hear your audio clearly, sir.
So about 2,000 crores is on account of SRs. And also whatever NPIs were there, we have provided for those NPIs too.
Okay. Got it. Okay. Yeah. Thank you.
Thank you. The next question is from the line of Rakesh Kumar from Systematics Group. Please go ahead.
Yeah, hi. Thanks a lot, sir, for the opportunity. So, couple of questions. Firstly, have we sold anything to ARC this quarter, and is there, is that number getting reflected in the NPL recovery this quarter?
Yes, we have done sales and that is reflected in the recoveries. And quarter 4 was 8 accounts, and recovery was 297 crores. And for the whole year, it is 23 accounts. The recovery is 1,188 crores in all. And cash was 1,105 and the SR 83 crores. That's for the full year.
And secondly, sir, we have written back contingent provision also this quarter. And as you mentioned just now that close to 50% or perhaps I couldn't hear it, almost all the accounts of restructured book has started billing. So if there is a remaining account, billing where the billing has not started, so what is the status of those restructured account now? Because now we don't have any contingent provision left.
No, see,
that's to clarify this. It's not returned back. The contingent provision that was kept COVID has now been applied to kept as an additional provision for restructured book. Restructured book requires 15% regulatory provision. We have made additional 15%. So the contingent provision has now been made as specific provision to these accounts as a prudential measure. Otherwise, the behavior of the book does not warrant any additional provisioning. But since there was a contingent provision that has been made now as provision applicable to the restructured accounts, an additional prudential measure. So it's not written back.
Yeah, got it. So, thirdly, just on this credit growth thing, was there a stronger credit growth number in the last fortnight, or if you can help us with what is the daily average growth number in credit, because P&L account, especially on the interest accrual side, it is not looking that great. If we consider the sequential number, so if you can help us on the credit growth number on the daily average basis for this quarter, or maybe on the last fortnight also.
I can only say that it is not really one-off which has been seen in the last quarter or on a particular day. It has been spread out, and this is something which I can say, but as far as numbers are concerned, we'll try to get you. And the reason why perhaps it is not seen as the P&L and the interest income is concerned, because you would probably appreciate that towards the last quarter of the last financial year, the interest rate environment was quite benign. So that is one of the reasons. The growth probably is not commensurate as far as the interest income is concerned. But nevertheless, as far as the growth part is concerned, maybe if at all any one of you have the numbers.
So 1,54,000 crores disbursed in the last Q4.
Yeah, it has been equally spread out. It is not that it has happened only on a particular day. 1,54,000 crore worth of disbursements have happened in the last quarter, and but it is spread out across the quarter. And also, it may not be out of place to mention that I think in the past also we have been talking, and I have indicated in the past also that there was underutilization of the working capital and non-availment of the term loans. So some of them also got waived in the last quarter. So that is how it is.
And so WCL, which is unutilized 2.7 trillion, what is the risk rate on that, sir?
Risk rate would be, it should be the usual risk rate.
AAA company.
Yeah, it is
89% of the corporate book is into the investment grade. That is how it is. So majority of them would be into that kind of a category.
Mm-hmm. Okay, sir. Okay. Thanks a lot. I'll come back to the queue. Thank you.
Thank you. The next question is from the line of Ashoka Ajmera from Ajcon Global Services. Please go ahead.
Thank you for giving me this opportunity. Good evening, sir. And congratulations and compliments to you, Khara Sahab, once again for the fantastic performance of the bank. I think on every parameter, I mean, your guidance and everything you have achieved for the quarter as well as the whole year. Having said this, sir, I have got some data point and some information and a few comments. Sir, our fund-based credit domestic is 24,06,761. Can I know the number of the non-fund-based facility which is sanctioned and availed, which is there on the non-fund-based front, sir?
Thank you very much, Ashok Ajmera ji. We'll get you the number relating to the non-fund base. I don't have that number readily available with me. Actually, the domestic advances are 24,06,000 crores. But if we add the foreign book also, it is 28,18,000 crores.
Yes, yes. Okay, I'll take that later, sir. Sir, some comments on your co-lending space, because last time I think we discussed something about it, that you are very aggressive on that and you have enrolled many partners. So can you give the color of how much have we achieved through the co-lending?
Co-lending we have started, but in the early days, there are always some knickknacks which needs to be addressed. So I would say that last quarter was more like that. Perhaps we'll see the upside coming from the co-lending in this year.
Yeah. Any number on 31st March?
I'm Seti here. Co-lending, we have entered into partnerships mostly in the last quarter of financial year. And we are putting up the integration, technology integrations and settlement accounts, escrow accounts currently. So I think it will pick up now. It was not much in the last financial year. But our target for the current year is at least 10,000 crores is what we are aiming to 15 to 16
okay. That's what I wanted to hear.
Yeah.
Anyway, some target. Sir, my next is on NARCL. For last 2 quarters we have been discussing, and I think now it might materialize in the current quarter. So where do we stand now? What is the current status of how many accounts are going in the first phase and how much is the amount, and can you give some color on that, sir?
As of now, the number of accounts identified are those 15 accounts, so that's about 50,000 odd crore. So that is for the system as a whole, and it's progressing. As you are aware that it involves various stages, so it is as of now at that stage. Hopefully, in the current quarter, we should be in a position to see some activity on this particular account.
Sir, coming to this again, future group, I mean the retail group and Shrai, where do we stand the provision-wise, both loan book and the investment book?
100% provision already made, sir.
For both the Shrai as well as
absolutely.
On the debt and on the investment.
Debt and investments both. Book is fully insulated from any future shock.
Sir, so one question is extended question on the same treasury. Now with the interest rate hardening, I mean the way the things are going, the inflation is going up, rupee is weakening, and there is a pressure. How much further basis point which we can easily absorb in our AFS book? I think you said 5.61 lakh and 2.08 is the maturity period. How much more, suppose 50 basis points, 70 basis points, we can absorb easily without actually booking the losses?
I would not be in a position to answer this question because we'll have to, and moreover, all this is a function of a movement of yield on a particular day when this is all assessed. So this is very, very difficult to really predict as of now. But yes, as I mentioned that we have already ensured that our HTM should be strong enough, and we have already done that because we are permitted to move investments from HTM to AFS on a particular date. That aspect has been already done that. So that is something which is within our control and we have already taken care of.
Thank you. Mr. Ajmera, may we request that you return to the question queue for follow-up questions. Thank you. The next question is from the line of Neshi Shah from Acko General Insurance. Please go ahead.
Sorry, all my questions have been answered. I don't have any further questions. Thank you.
Thank you. The next question is from the line of Abhishek Murarka from HSBC. Please go ahead.
Hello. Good evening, sir. Thank you for the opportunity. So couple of questions. One on growth. The SME growth sequentially was a little weak. In fact, the book was flat. But when we compare it to peers, we've seen them grow at a fairly fast clip. Can you just make some comments on the space? Is there a lot of pricing pressure? Is there a lot of competition, or any other reason why the book may not have grown this quarter? That's the first question. The second one is on margins. What is your outlook from here? You have a low CD ratio, so there should be some benefit of that. But there's also likely to be some pressure on deposit rates, etc. So what is the outlook? These two questions, sir. Thank you.
Yeah, SME book, of course, I think if we compare with March 20 to 21 movement, as compared to that, it has witnessed a stronger growth. So I would say that going forward for us, we should be in a position to see even stronger growth coming in SME segment. We have actually, structurally, we have strengthened our delivery process in SME in last 1 year. So that should help us, and it has actually, I would say that it is still, we are upgrading that process also. So that should help us in seeing better numbers in SME. Yeah, please. Please.
If I may add here, if we take only pure MSME, this SME we have a large companies also which do not qualify MSME as a part of our portfolio. If you see the pure MSME, we had an annual growth of almost 30%. So I think it's a very large, significant growth. And as I was mentioning, a lot of initiatives in terms of changing our technology platform, cluster-based financing, and two-tiering of the relationship manager on the ground. Several initiatives have been taken. I'm sure this growth will be sustainable in the current financial year.
And sir, any comment on the pricing here?
Pricing, I think we don't visualize any pressure on pricing as far as our SME book is concerned.
Okay. And the second question on NIM?
Second question, NIM, I think, generally, typically speaking, the kind of trend which we observe, the deposit interest rates move up with a lag. And considering the fact that our 74% of 74% of the book is linked to MCLR, EBLR, and T-bill, so we should be in a position to see an improvement in NIM.
Thank you, Mr. Murarka. May we request that you return to the question queue for follow-up questions. The next question is from the line of Prashant Kumar from Sunidhi Securities and Finance. Please go ahead.
Thanks for the opportunity, sir. If I missed, I'm so sorry, but on the loan processing fee, on Q3 it was around 9 billion and it jumped to 15 billion. So such type of move in Q3, is there any waiver or something?
So generally what happens is that the renewal of the loan, renewal of the working capital happens towards the last quarter. So majority, there's always some kind of a, concentration towards the last quarter. So that is the reason why last quarter has seen a growth as compared to quarter 3 in the loan processing charges. But apart from that, there is nothing else to explain for this.
Okay. And on PCR ratio, it has improved to around 75% and expanded. And as you mentioned, the restructure book and other slippages is also going down, and restructure book is also performing well. So, what is the reason still you are increasing PCR? I mean, it is on the on credit cost. If you could give some color.
See, one of course. We don't have a situation like the aging provision, etc., etc. So that is one thing which is there. But PCR, nevertheless, as a matter of policy, we have decided that we will insulate our balance sheet from any potential shock which may come. So that's why at the earliest sight of the risk, we are trying to see that we should adequately provide for such risk, such kind of a delinquency, and that is the reason why we do it. So 75% is there, and also if we look at the corporate PCR, even excluding OCA, stands at about 93%. So, we don't want our balance sheet to be exposed to any kind of risk. That is the reason why we are practicing this.
One last, on deposit and general insurance, it has increased from 14 billion to 16 billion. There is sequentially there is huge jump. So is there any missing? Deposit also has increased around 6% sequentially. So it may be some impact of this, but the jump is high. So is there any I'm missing on that calculation?
Deposit would be essentially the DICGC, and general insurance is insurance of our assets also. And you would have seen in the previous year in general the cost of insurance has gone up, so it is reflected in that.
Oh, okay. Thank you so much, sir. That's it from my side.
Thank you. The next question is from the line of Jay Mundra from BNK Securities. Please go ahead.
Yeah, hi sir. Thanks for the opportunity. I have few questions.
Mr. Mundra, we are not able to hear your audio, so please increase the volume of your device.
Yeah, is this any better?
Yeah, please go ahead.
Yes, sir. So the first question is on deposit cost and LDR. So if I calculate our domestic LDR is around 61%, which is clearly suboptimal. And at the same time, if I were to see our deposit rates, historically I believe SBI was the price setter, and with other private banks having some spreads over SBI deposit rate, which currently does not look like the case. and at the same time we have the domestic LDR at 61%. So if you can comment as to if you want to bridge this anomaly of lower LDR as well as a slightly higher deposit rate, or how are you thinking on this?
See, the issue is that maybe as on March it was at 61%, but today it would be somewhere around 62.6%. That is the kind of a credit deposit ratio we are seeing. So we could see the kind of a growth which we might get to see in the loan book. So I think maybe at a point of time we took a call in terms of revising the term deposit rates, and that too into 1 to 2 year duration. So that is something which we did, and we just wanted to be ahead of the curve, and that is something which we have done. But I think on a quarter-on-quarter basis, it may not really reflect the right picture. Once we have a 1 year time period, it will probably look normalized.
In any case, our deposit rates are not, they're either lower or, they're just on par.
We are actually,
rates are higher than any other competitors.
I'm not really very sure of the reason for your impressions, but nevertheless, this is where we stand.
And secondly, sir, we had announced $1 billion line of credit to Sri Lanka, right? And of course, that country is in financial stress. Is that $1 billion is on our book, or this is just a government assistance? Is there any risk to SBI because of this thing?
This is guaranteed by the Government of India.
On our book. It's on our book, but guaranteed by Government of India.
It's on our book, but guaranteed by Government of India.
Fully guaranteed.
Fully guaranteed by Government. No risk on us.
Sure. And sir, on corporate growth, right? So this quarter there has been a healthy 10-11% quarter-on-quarter corporate growth, and also decent on a YOY basis. Is this more seasonal, or you think SBI outlook on corporate growth has changed a little bit? I mean, so in the last few quarters we were saying that we will pick and choose. Or are you seeing slightly better opportunities now? How should one look at it, the corporate growth jump?
You would have observed that 89% of our exposure to corporates are into the investment grade. So there is no compromise as far as the underwriting is concerned. Secondly, what I mentioned in terms of the unavailed working capital facility, which used to be as high as about 50%, now it has come down to about 44% kind of a number. So I think to that extent there is a definite improvement, and in terms of the working capital utilization, and similarly the situation for the unavailed term loans. So these are some of the things which is a function of the capacity utilization, and part of it also when it comes to working capital utilization would also be on account of the upside which is seen in the commodity prices. So I think I would say that it is not one-off. To my mind, it appears to be sustainable.
Thank you, Mr. Mundra. May we request that you return to the question queue for questions. The next question is from the line of Saurabh Kumar from JP Morgan. Please go ahead.
Sir, two questions. One is on this OFA recovery. So what would be your expectation going ahead? And, especially in relation to the power sector book, do you think that the resolutions pick up now given the situation of, power assets in the country? And the second is, just want to reconfirm my understanding. So on this, if we have a yield increase, we obviously for investment depreciation, but there should be an offsetting impact to some extent on the employee provision. Will that understanding be correct? Thank you.
As far as the impact on the power assets, I think there should be an option to fetch better value, but let us wait and watch how really things pan out going forward, because very often when it comes to the foreign capital, they have got certain limitation for supporting the thermal powers. So that is something which I would like to mention. But yes, nevertheless, I think the plants would be seen in performance, and which might perhaps evince some interest from the potential buyers. So that's how I understand. And your second question was relating to? AUCA recovery, actually, we could have about 7,800 crore.
7,800, sir.
And going forward, maybe you would like to comment?
Sure. Generally, our run rate on AUCA recovery is about 8 to 10,000 crores. And this year also we would be targeting a similar number.
Okay, thank you. And sir, the second question, on this investment, so we have an investment depreciation, but let's say for this, 50 basis point yield increase, how much release do we get on employee provision?
No, actually, earlier it used to be like that, but now since when it comes to the pension liability and the gratuity liability, those funds are now managed by our SBI funds management. So that's a separate trust also. It is not managed by the bank, so it will not be in a position to offset.
Okay, understood. Thank you, sir.
Thank you. The next question is from the line of Jignesh Shial from InCred Capital. Please go ahead.
Yeah, hi. Just reconfirming what you said earlier. There have been 8 accounts sold at 297 crores during the quarter 2 years, and full year 23 accounts at 1188 crores. Is this number correct?
Yeah, right. So ARC sale. If the question is on ARC sale, quarter 4, 8 accounts, amount realized is 297.
Yeah, and full year 23 and 1188.
1188, you are right. That's the ARC recovery.
And it has been fully provided now?
Not necessarily, but much of this would have been earlier provided, and if it was, then if there was any provision right now, that has been accounted for.
All right.
But this could be of different category of accounts.
Okay. And second, the contingent provision against COVID, what we were handling it earlier, now we are keeping it against restructured accounts. Is my understanding correct?
Yes.
Yeah. The COVID provision which was there, now it is against the restructured accounts. That's right.
Can you quantify it please once?
The additional provision for the restructured accounts now stands at 7,900 crores. 7,912 to be precise.
And just, Shasti, can you give some brief details about how the business has happened through YONO? More details about the loan sold or customer acquisition has happened through YONO app and all? If you give just a brief about that during the quarter.
Almost about 26,000 savings bank accounts are being opened on a daily basis through YONO. And when it comes to the mutual fund sales, this has been about 1,548 crores, about 11.36 lakh policies, personal accident insurance policies we have sold through YONO. And when it comes to our pre-approved personal loans which were disbursed during the quarter, they were about 6,500 crores. Krishi Agri Gold loans which we sanctioned were about almost 13,000 crore in the quarter. And KCC accounts which were reviewed through YONO were almost 2.35 lakh accounts which were reviewed.
Loan book is 25,000 crores.
So loan book overall is about 25,000 crores with the help of you.
All right. Thank you so much, sir. That's useful. All the best.
Thank you. Thank you. The next question is from the line of Roshan Chutke from ICICI Prudential Mutual Fund. Please go ahead.
Yeah, thanks so much for taking my question. Firstly, this other provisions bit of 1495 crores. What is this relating to?
Part of it would be the standard provisions also, no? Just one sec. Can you please pull out the slide? 14,000 crores.
Slide.
Yeah. Sorry. Can you please repeat your question?
On slide number 26, you have these other provisions, right, of 1495 crores. What is this corresponding to?
This is contained.
Part of it is for the non-fund base. And just one sec, I'll just give you the details.
This is not from the term.
Yeah, it is all the non-fund base.
Non-fund. And of the investment depreciation of 2,061 crores, how much is related to MTM?
It's not MTM, it is on account of the security receipts.
Mostly of that.
Okay, and where do you have MTM related provisions?
There was no MTM provision as on 31st of March.
Oh, okay. All right. Thanks so much. That's all from my side.
Thank you. The next question is from the line of Manish Shukla from Axis Capital. Please go ahead.
Yeah, good evening. You said that about 41% of the book is MCLR. Could you break up by tenor of the MCLR, as in how much would be 1 year MCLR and how much would be less than 1 year?
I would not have that detail with me, but
But bulk of it is 6 months MCLR, which has become the benchmark.
Okay, so that is good enough. Second, given the increase in digital and related transactions, how soon do you think it can start reflecting meaningfully in operating efficiency numbers in terms of cost to income?
Yeah, I think it's going to be an ongoing effort. And as of now, about 25,000 crore worth of business is, in terms of cost of sourcing, etc., is much lower as compared to the overall book, which is actually much bigger. But I think maybe it might take some more time. But yes, of course, it's a step in the right direction. And would like to add that for a bank of our size, we don't have a choice of only having the digital. We have to have the digital model. So that is something which will work.
So about 10% of the overall personal loan book, but as it scales.
Yeah, we would like to have as much as possible because it is a frictionless channel which is in vogue, and we would like to see that it improves even further. Almost about 5 crore worth of people having joined YONO. They are the registered users. Hopefully, with the value add which is coming, many more will also come.
Sure. Last question, sir, is for the Express Credit loan product. What do you think is your potential target customer segment to which you can sell that product, and how much of that have you already penetrated in terms of number of individuals?
This Express Credit is a product which is on a revolving basis also. Once it matures, it is not that those customers will not avail. They will again avail it also.
Yeah. What you said. I think every quarter we keep telling about this. Our target group is basically the corporate salary package customers. And we have a universe about 1.75 crore as we speak, and is growing. This CSP customer base. And our current penetration of Express Credit is just about 27%. As Chairman mentioned, it's not only that we have still unexplored kind of customer segment. The enhanced salaries and all other things also contribute in terms of growth. So just to address your question, I think the penetration is just about 27%. We are further improving the penetration level and also adding to our customer salary package, corporate salary package customer base.
Sure. So that is 27% of 1.72 crores. Is that right?
Yes, sir.
Oh, got it. Thank you. Those are my questions.
Thank you. The next question is from the line of Nilanjan Karfa from Nomura. Please go ahead.
Thank you, sir. Just two questions. On slide 18, we have this total provisions of 30,629. Does this also include provisions that we have on security receipts, which is 7859, or it is outside that?
No, that is outside. That is on the MTM provision. That is on the provision for the investment in investment depreciation.
Okay. Thank you, sir. And the second question, obviously savings rates have come off quite significantly. In what conditions do you think SBI may have to start raising savings rate?
I think we have not yet taken a call on this. Maybe we'll wait and watch how things really pan out and how the competition moves, and accordingly we will be taking call.
Right. So if I can just delve deeper, would you be able to specify, what is the cost that you actually incur on having a savings account, for which a 2.5% is probably what it is giving you, and therefore it may not move up potential or?
Really allocate the cost like that. So
also it must be remembered that savings bank account is an entry level, and our ability to upsell and cross-sell is there. It's not only about operational cost, which are savings bank. I think from that perspective, it has to be.
Okay. So you basically believe it has to be more competition driven and broader interest rate market.
Absolutely.
Yeah.
Okay. Thank you, sir.
Thank you. The next question is from the line of Ankit Ladhani from Mahindra Manulife. Please go ahead.
Yeah, hi, sir. Just one question. On the segmental breakup that you have shared, the retail banking operations income has dropped significantly during the quarter.
Not very clear. But we are unable to really understand what you are saying. Can you please be very nearer to the mic?
Yeah, this one. Yeah, am I audible now?
No, there is some echo.
Okay. This is just on the segmental breakup that you have shared with the exchange filing. The retail banking operations income has dropped sharply during the quarter from around 6,900 crores in Q3 to around 440 crores in Q4. So what was the reason for this?
Segmental revenue, maybe we can respond to this offline.
Yeah, we will. I'm not having those details with me. Maybe I'll ask my
distribution team.
Yeah,
Sure.
distribution
Okay.
team to provide you
No issue. Yeah, that's all from my part. Thanks.
Thank you. Ladies and gentlemen, we are short of time. I would now like to hand the conference over to the chairman, sir, for closing comments.
Thank you very much once again for taking out time and to be with us. That too on a Friday evening. All the very best to all of you. Stay safe, stay healthy. Thank you.
Thank you. Ladies and gentlemen, on behalf of State Bank of India, that concludes this conference call. Thank you for joining us, and you may now disconnect your line.